Are tariffs affecting corporate earnings? That is the question tonight. After a short break from all of the tariff questions and conversations, we're back to that discussion. Hello, friends. Welcome back to another quick video update. I do want to talk about tariffs and earnings. And what is the answer? Are tariffs really affecting earnings as we look back at 2025? The answer? No, not really. This is actually the shock of 2025. Besides, of course, Indiana University football. Go Hoosiers. My dad's from Indiana. We're definitely rooting for you. We've got a lot of family out there. So why do we care about earnings? Why are we focused on earnings? Well, earnings are the mother's milk of stocks. If you want to see the stock market go up, we need to see earnings rise. We're about to enter earnings season, and we'll see the reports for the fourth quarter of 2025, and consensus expectations are shaping up great. We're tracking 12% EPS growth in 2025. If earnings beat by their typical amount in the fourth quarter, the S&P EPS growth would exceed 10% for the fifth consecutive quarter. Now that's the longest stretch since the fourth quarter of 2018. So how did companies manage to do this? With the U.S. weighted average tariff near 100-year highs. Yes, I said 100-year highs. Well, I'm glad you asked. As the White House began rolling out its tariffs this past spring, the initial market reaction was intensely negative, and EPS estimates were cut sharply. Investors were bracing for a steep decline in corporate profitability. But the fall off never materialized. The 12% EPS growth in 2025 that we're looking at is virtually identical to the consensus estimates for the start of the year. So nothing really happened. Broadly speaking, companies used one or more of the following methods to mitigate the tariff costs. So this is our best explanation of this. Number one, creative supply chain management. Number two, cost reductions in other areas of the business, and we did see some layoffs. And number three, price hikes. And that's where we see the actual price increase when you go to buy something. There was no one-size-fits-all strategy. Every sector was different. Every company was different. In many cases, it was a combination of all three. But to give you a more specific example, if you're switching to an import from a lower tariff country, or if you're boosting domestic manufacturing, or if you're modifying product design, companies did all these things to move quickly and really did adjust their supply chains. To the extent that certain tariff costs could not be avoided, companies pursued efficiencies that offset just a portion of the costs. So, as of December, we estimate that the average tariff rate still stands at about 15%. Now that's down slightly from the 16% in August and much lower than what we saw in May. The Supreme Court is poised to render its decision on the legality of using the International Emerging Economic Powers Act, say that fast, IEEPA for short. That's using country-level tariffs. We anticipate that the administration will lose this case, actually. The betting markets have it at a 69% likelihood that they would lose. And if they do, we believe that they'll still continue with tariffs, but under a different act. There's a few other options that they have. More importantly, midterm elections are coming up. Cost of living concerns, i.e. affordability, is front and center. And so we really don't think that they're going to put more pressure on companies and push these tariffs higher. Most likely they stay where they are, even tick down as they have been. Time will tell. I hope this is helpful. It's another just quick update for you guys. Oh, one more shock of 2025. The TCU, Texas Christian University Horned Frogs, yes, upset the USC Trojans in the Alamo Bowl. Go Frogs. Anyway, we'll see you next time. Have a great night. Take care.